thank you all very much for the opportunity to speak with you. I really enjoy these conferences, look forward to them every year. It's almost like a holiday. Maybe just spend a second sharing some stuff with you. I'm not going to put up a PowerPoint presentation with all kinds of doom and gloom and charts about how bad and dire the economic situation is. That's actually the opposite of what I want to do for you today. I have the pleasure and privilege and responsibility of speaking to financial advisors across the country on the merits of portfolio diversification, strategy, how to present this concept with clients, and most importantly, I think probably the biggest takeaway I hope you get from this little panel discussion is to understand that presenting gold, it has to be done with a biblical mindset, I think, first. Unfortunately, most financial advisors, and for sure your clients, are secular, so we can use language that parallels what's in the scriptures, which, I mean, if the presentation last night about the unique book, I mean, there couldn't be a more unique book designed for financial advisors. When we read the scriptures, there's 2,500 references to money. So just let that sink in for a minute. 450 to gold, 250 to silver. So the concepts we'll hopefully get a little bit more into, but why do we incorporate this as part of our business model? Why do we present this to our clients as part of the overall strategy? And most importantly, how do we do it so we don't come across either as kind of a little nutty or
gold bugs.
Yeah, or gold bugs is a term most of you, I'm sure, heard. The idea is to sound the opposite of nutty, but better than your peers in that you have an extra asset that can be added to the mix that your competition doesn't understand. They don't know how to present it. They're going on biases. Like the presentation last night, they think gold is an egg. In fact, it's not. It's a cannon. So, it is. You know, that was fantastic. That was really powerful. I enjoyed that. So, yeah, that's what I want today, is to convert in your mind, which is what likely is that gold is an egg, to make you think about it and maybe get it into your bones. That was good. That gold is just part of an overall strategy, and it introduces an element of honesty, of integrity, and of truth that is often lacking in many of the other offerings that you guys present to your clients. So I think we'll start with Tom. Tom and I have been talking for years now. He's certainly one of my favorite advisors to call in this country. You all know him probably as well or better than I do. Here with his lovely wife, Priscilla. And he's going to tell a little bit about his business and how he incorporates gold into it, how he blends his biblical values into the day-to-day business that is his life. And Rolf as well. Rolf, I was introduced to Rolf only a few years ago, and it's been a real pleasure to know both of these individuals, not just as financial professionals, but as human beings and Christian brothers. So I hope you both, all of you, learned something from what two industry professionals are already doing, how they incorporate this into their business, especially as it relates to timeless biblical values. So, Tom, you want to take it away?
My father came from Poland and Germany, and he witnessed wheelbarrows full of paper money being brought by the Weimar Republic to be cashed in just before Hitler brought in a new currency. He also witnessed a prisoner of war, or someone who was captured, swallow a gold nugget just before he was strip searched. And what I'd like to share is from the unique book, which will outlast the planet. Both my brothers are engineers. I decided for a more interesting career in accounting and finance. But in any case, the engineering approach to the Word of God, which is creative energy, I'm going to give a few quick Bible references on gold, starting with why you should not purchase gold, the dangers of purchasing gold. Brandon wasn't expecting this. Starting from Ezekiel chapter 7, verse 19, it says, "They will fling their silver and gold into the streets, and the gold will become an abhorrent thing. Their silver and their gold will not be able to deliver them in the day of the wrath of the Lord. They cannot satisfy their appetite, nor will they fill their stomachs, for their iniquity has become an occasion of stumbling. Gold does not neutralize God's wrath. James says the same thing. Come now, you rich, weep and howl for your miseries which are coming upon you. Your riches have rotten, and your garments have become moth-eaten. Your gold and your silver have rusted, and the rust is a witness against you, and will consume your flesh like fire. It is the last days that you have stored up your treasure. Behold, the pay of the laborers who mowed your fields, which has been withheld by you, cries out against you. The outcry of those who did the harvesting has reached the ears of the Lord of Sabaoth. You have lived luxuriously in the earth and led a life of wanton pleasure. The scripture says very clearly that riches do not profit in the day of wrath. So gold and silver will not be able to pay off or to discourage or dissuade God from exercising wrath when it's deserved. So those are, let me say, first of all, the Bible gives very strong warning that gold doesn't trump God. Having said that, the Bible teaches a lot more about gold. The second chapter and the second to last chapter of the scriptures refer to gold as a good thing. In Genesis chapter 2, verse 12, it says, around the whole land of Havilah there is gold. The gold of that land is good. Second chapter of the Bible. Second to last chapter of the Bible, in Revelations, we read, the city was of pure gold like clear glass, and the street of the city was pure gold like transparent glass. So we see second and second last. Abraham was rich with livestock and cattle and silver and gold. Those are like barbells. Livestock and cattle have energy, they reproduce, they produce life, they produce more livestock. Gold looks pretty and is lazy and does nothing. Two opposite extremes of wealth strategy. The verse in the scriptures that I find most interesting, though, about why we need to look at gold and why God thinks it's important, except for brief periods of time like Solomon, when there was so much economic prosperity that gold and silver were almost, or silver was like stone, basically almost worthless, okay, is this verse from in Psalm 19, which says, thy word is more, the statutes are more desirable than gold. So God uses gold as a benchmark against which to compare his word. He says, he wouldn't say, thy word is more desirable than gold, yea, than much fine gold, unless gold was something of value. It wouldn't make sense to say it's more desirable than wood. Got it? So obviously God's committed to ensuring that this particular commodity, it's actually much more than a commodity, retains value, but it never trumps the power of God and the desire and the intent of God to exercise wrath, i.e., riches don't trump righteousness. So that is my underlying philosophy of using gold in my practice as an investment tool from a biblical perspective.
Wow. Yeah, you're right. I wasn't expecting the beginning there, but you're but you're absolutely right. At the end of the day, all the material riches we have, really, I mean, they're at the end, they're worthless to us because wherever we're going, it's not coming with us. So that's an important point to make. The reality is that the material world is where we are right now, and it is the material assets of your clients that you guys are managing. And those assets that you're holding, many of them are very complex in terms of counterparty risk. When you look at money market funds, blue chip stocks, all those types of products represent someone else's risk. Mostly it's your risk, really. Banks always win. But what I'm getting at is you're dependent on the solvency of the institution that's issued that asset, that product, whatever it is that you're offering. There's a risk there. When you buy a managed product, You are dealing with the risk associated with the skills of that manager. So these counterparty risks, many of us don't really consider. For instance, many ETFs, the world wants to move towards ETFs. They're cheaper, they're more, easier to trade. The reality is, though, that there are multiple levels of counterparty risks in a variety of different products. ETFs are a standout in my mind because of how they're constructed. There's many warnings from official institutions and so on. What I'm getting at here is it's important to have something in the makeup that isn't a promise from someone else. Even cash is a promise. It's a promise on the ability of the country's central bank to generate revenue through taxation to pay off the interest on the debt they borrowed and so on. This is how our currency has money. So for thousands of years, the idea of using a store of value that's not somebody else's counterparty, there's no counterparty risk to this tangible asset, whether it's bricks or diamonds or whatever. So this subject of an asset that's not dependent on the skills of a manager or the solvency of an institution is very simple and easy to understand. And it's very difficult to fake. There are paper proxies out there for gold that are IOUs, certificates, etc. And all of those, in many cases, are extremely leveraged and have been lent out time and time again. How many of you would feel comfortable knowing that what you think is yours has 251 other people claiming that they own it? Well, nobody's hands went up. Not really shocking. That's how the COMEX futures market works. There's 252 contracts issued against the same ounce of gold. So what these gentlemen have done is identified the risks associated with it. It isn't just the dollar price of gold, it's the fact that they own a physical asset. Okay, so would you explain, Rolf, how you incorporate this into your model? Thank you.
First of all, I'd like to ask, how many here remember Black Monday? There's a few of us older guys remember it. How many remember the .com in 2002? 2008? Hands? In 2008, my wife and I were in Newfoundland. I love Newfoundland. I love Newfies. And when we left, I said, Joan, I will not look at a paper. I will not listen to the radio for 3 weeks. And so we were all over the rock. We came home, and the TSX had gone from 15,000 down to less than 8. I said to my branch manager, that's the last time I go on holiday. Look what happens. So Joan said to me, Rolf, what are you going to do about it? And I said, Joan, certainly I'm a Bible school grad. I'm going to follow scriptural principles, but I'm going to read. I'm going to do everything that I can because I knew nothing about Fannie Mae and Freddie Mac and credit debt swaps and all this stuff that's going on under the sheets that most advisors didn't know about. So, what happened during that time? Well, I met Brandon, and I know that the first thing that they teach you in the CFP is asset allocation, cash, stocks, bonds. But I'm also an old guy, and I remember buying a hamburger for 35 cents. 35 cents, smothered in onions, the whole bit. You can't buy the same thing today for 10 times that. And so it's not just about asset allocation. It's about what will your money buy for you. And so down the rabbit hole, I'll call it a rabbit hole, I started doing a lot of reading. I'm following about 50 different authors right now. I mentioned a couple the other day, James Rickards, Peter Schiff, I could go on. But, it is a dark rabbit hole. But yet, Brandon led me to a Christian author by the name of Gary North. And Gary North wrote a book called Honest Money. And like Mike Maloney and his Hidden Secrets of Money, my eyes were opened up as to how money really works. And it's a scary thought because I think many advisors don't understand. The point I make, and I'll be brief, is that it's not just about diversification. And it's not an investment. Although Nick has written a book called Gold at 10,000, I don't believe that. Although I hope he's half right. The point is, it's about insurance. It's a hedge against what we saw yesterday. I was electrified by what Ethan put up because this is the rabbit hole that I've been going down in the last number of years. Understanding that the big white elephant in the room is government debt. I have a bet on with one of my guys in my branch office about QE4, whether it comes around before the end of the year. We'll see. All I know is that debt has to be repaid. Would you pay your tax bill with your credit card? That's what the government's doing. I buy gold for insurance. By the way, one last little example. I find that many of my clients, they're like you're down in the Amazon, and there's a river, and they're just dipping their little feet in the water because they're afraid of piranhas are in there. I think many advisors are the same way. They don't want to take a step like buying physical bullion until they kind of test out the water. Well, I'm going to give you some physical numbers. I checked this morning at 5 o'clock. I'm an early riser, but my bullion that I've had with BMG is up 7.3% year to date. Find me an index, whichever one matches up with gold, that's anywhere close. The point that I make is that it is not an investment, it's a hedge. And I fear, I use that word carefully, I know God, I know whom I have believed, and I am persuaded He is able to keep us against that which I've committed against that day. I have strong faith in God, and yet we have a fiduciary responsibility to the widow across the farm table that has no idea about credit swaps and debt swaps. It's my responsibility to protect her purchasing power, not just how many dollars she has.
Thanks, Ralph. Yeah, so we could probably go on like this for a great length of time, but I think what's most valuable on this subject is that the reality is that most fiduciaries across the country, money managers, don't have the knowledge on this topic, and that's a shame. So I challenge you to learn about this subject. Spend a little time. Look at that little placemat brochure. I don't know how simple or how we could have made it more simple. But if you read more about it, you'll find it's also one of the most complex subjects to grasp. So that's your role as a fiduciary, to have 10x the knowledge that your clients need. My opinion. As responsible money managers, it's important to understand the material you're actually working with, which of course is money. What is that? So what I want here is specific examples of client meetings. How was it presented? What was the reaction? And I'd also like to, if possible, if you can think of two, because often when you begin presenting this idea to clients, many money managers I've found start out on the doom and gloom, and they scare their clients. That's not good for business, to scare away money and clients. So we want to present this in a friendly, logical, rational way so that your clients go, that makes sense. So Tom, you want to give us a few?
Sometimes I deal with people in the oil patch, and lately I dealt with an engineer at Suncor, a major in the tar sands, oil sands division, and he had a significant amount of money invested. I looked at his investments and I said, there's nothing in here in precious metals. Now, he's an engineer, and so he's thinking engines, machinery, things that produce something visible. Gold sits there and looks pretty and does nothing. Very pretty, but very lazy. So he figured, well, why should I even invest in that? And I said, well, it's been internationally recognized as a store of value for thousands of years. It's portable, it's divisible, it's transferable. If someone was to rob you, someone was to hold you up at gunpoint, and you had a bunch of paper currency and a bunch of gold that he could see, would he ask for the paper currency or would he ask for the gold? And so it got him thinking as an engineer, thinking, well, yeah, it does actually store value, and it is internationally recognized. Maybe I should look at that. And so as I work with his portfolio, I'm going to transfer some of his holdings into gold, and with his blessing and with his acceptance, because he gets it. And I mean, we have seen, my father saw the Weimar currency basically go to nothing. We have seen the Canadian penny effectively disappear very recently. I can guarantee you, one day, the Canadian dollar and the American dollar will be worthless. But according to the scriptures, this stuff on planet Earth, subject to the governing power of God's justice, will retain its value. And so in terms of our fiduciary responsibilities, if we as believers in the book, in the unique book, ignore this particular tool, we do our clients a disservice. At the same time, I had one person come up to me, and he became a big gold bug. He said, you know, I think I should sell my house and put everything in gold, and I should rent. And I said, where'd you get that idea from? And so obviously he's been reading a lot of books down one particular mindset. I said, you know, that is a bit too radical for my liking. Remember that example where Abraham, the barbell, you had gold on one side, you had cattle and livestock on the other side. I said, well, no, you put everything on one side of the barbell. That's not wise. I don't recommend you sell your house and put everything into gold and then rent. Now, this was in Calgary about 2 years ago. Maybe he should have done that. I don't know. And maybe people here in Toronto and Vancouver should be thinking about that. I'm not saying you should do that, but I am trying to expand your thinking a bit in terms of God is committed to this particular asset class, if I can use that expression. It's only worth things here on planet Earth, okay? We leave planet Earth, it's useless. While we're on planet Earth, it's a lot more powerful than any of that paper or plastic in your wallet. Just be held up. Well, just, don't be held up. But the point is, it's people quickly recognize what's valuable and what's not valuable. So those are two examples. You don't want to go extreme where you put it all there, but on the other hand, you don't want to be thinking just like an engineer who's in the machinery and ignoring this particular tool which God recognizes as being a legitimate store of value. A couple examples.
Okay. Well, before your example, Rolf, just a quick question. Who in this room was alive on August 15th, 1971? Show of hands. Most of the room. That was the last day that the United States dollar was pegged to gold. You could literally go to the U.S. Treasury and exchange U.S. dollars for gold. So before that, for thousands of years, gold was money. It's only recently that it's been detached, and now it's starting to come back to be a foundational aspect to the monetary system. So tell us about your experience, Rolf.
Just to comment on what you were just saying, central bankers, they hate gold because they can't print it. And they get out the violins, quantitative easing. It's legalized counterfeit is what it is. An example. Last Christmas, I was at my wife's Christmas party in Waterloo. My wife's a dental hygienist, and one of her associates, her husband, is a car mechanic, but he also sells cars. And we got talking. Oh, you're a financial advisor. Oh, I'm happy with my advice. Look, I'm not fishing for a client, But we got chatting, and I said to him, Jay, I said, you sell cars? Yeah. I said, would you ever pry open the dashboard and take the airbag out and sell it on the side and then sell the car? No, I wouldn't. That's dishonest. And I said, Jay, the airbag is gold. I said, it's an insurance. It is not an investment. A lot of guys think, I've read books. Jim Sinclair believes gold's going to $50,000. Those are numbers. I do believe this. I firmly believe that gold retains its purchasing power in the long run. Here's my proof. 500 years before Christ, a Roman soldier has a 1 ounce gold coin in his pocket. What would that buy him? Well, it would buy him the finest suit of armor, a pair of shoes, a belt, and a couple of nights out in the town. Today, gold is about $1,500 Canadian. And what would that buy him? Well, a fine tailored suit in Toronto, $800. You know, a pair of shoes, $200. It buys the same thing 2,500 years later. Purchasing power. And so what I'm saying is that I think within every person's portfolio, there should be some as insurance against the dollar, because we saw the horror story yesterday. I believe it's coming. I don't know when, but I've had this rabbit hole. Maybe I read too much, but it's a scary thing what's out there in terms of government debt.
Thanks, Rolf. How many in the room are dual licensed or in insurance? Okay, so we got a few. So everyone understands the concept of insurance. We buy home insurance, fire insurance for our home. We don't expect our house to burn down every 7 years. We buy collision insurance for our vehicle, but we don't expect to write off a car every 7 years. We insure our businesses, but we don't expect to get sued every 7 years. The point is, we buy insurance to protect against unlikely scenarios that, if they did happen and we had no protection against it, would be devastating. So why is it, with the knowledge that even just going back to 1929, consistently, every 6.5 years, we have on average a 37.5% correction in the stock market? Some years have been significantly worse. Why is it we don't insure against that? I don't know. But maybe ask yourself that question. I want to say thanks very much, guys. If there's anything else you want to add.
Just one quick thing. In one of our previous presentations, someone said, if you had cancer, would you go to the hospital that had the lowest overhead, the lowest MER?
Yeah, good point.
And well, of course not. Of course not. The BMG group, I've been, I guess, associated with them for about 10 years. Do they have the lowest MER? They do not have the lowest MER. Do they have the best service in this particular space? They have the best service and integrity in this particular space. Check it out.
I still say mine is up 7%.
And I'll leave this closing thought. Imagine this is a 1964 silver quarter. It's actually a 1939 silver 50-cent piece, but for argument purposes, it's a 1964 quarter. That was the last year. After Kennedy was assassinated, they changed the metal used in their coinage. But in 1964, a 25-cent piece would buy you a gallon of gas. That's 3.8 liters. What will 25 cents today buy when you go to the pump?
Fumes.
Exactly, fumes. That silver quarter from 1964 would still buy the same amount of silver at the gas pumps today. That is the purchasing power, the power of the preservation of purchasing power in metals. It's remarkable. So just consider these things. I hope you guys take a look at that placemat, look at how this asset tends to move the opposite direction. Protect your clients, protect your income, because if your clients lose money, so do you. Be diversified, and thank you for your time. Thanks, gentlemen.